So let me friends, I will tell you only 4 things. Expenses, losses to be debited in trial balance, incomes and gains to be credited in trial balance, assets to be debited in trial balance, liabilities to be credited in trial balance, personal account, the debit balances to be shown debit side, personal account credit balances to be shown on credit side. This is only a simple rule for preparation of the trial balance. Now I am going to explain one simple case analysis how the trial balance to be prepared, very simple form. And before that, you all should know what is an expenditure, what is an income, what is an asset, what is an liability. Capital can be procured in different form. One is through equity shares, another one is through preference shares. This is also a liability. And I'll just easy way of identification of liability tell you. In the name ending, if you identify the word like reserve, the word like fund, for example, general reserve and the secret reserve and debenture redemption reserve. The name ending, if you find the reserve, 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 that is a liability. If the name end, you find the fund, 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 that is a liability. Simply leave it, whether it is a number of components you know or not. If the name end you find the reserve, if the name end you find fund, then it is a liability, apart from the capital. And also the long term capital, which is maybe debentures. When firm needed amount, we raise from the outside, like from the bankers we will take it, and from financial institutions you take it, and from the public we will take it. So these are all liability. So being a simple identification, what we owes is nothing but we taken from others, that is a liability. What we owns, right, that is an asset. For example, I have my mobile. So being a simple identification, what we owes is nothing but we taken from others, that is a liability. What we owns, right, that is an asset. For example, I have my mobile, it is an asset for me. I have my car, it is asset for me, right? So if the same car when I bought from the finance, then it is a liability what I have to pay to them, because that car I owes from the finance. So OWS, owes is a liability. OWNS, owns, it is a asset. So this is where a simple categorization of assets and liabilities. And you all know that expenses. Let imagine it to run a business. What type of the expenses you need? Salaries you need, wages you need, electricity you need, postage you need, telegram you need, and stationery you need. All this is when you are appointing an auditor, you have to pay auditor fees and the legal fees. So because business is dealings with various parties, then sometimes you have to maintain an auditor, auditor as well as the advocate also. So these are all expenses. And incomes, generally this is incomes two types, and one is business income and another one is non-business income. Business income is only sale of goods and services. And other than income of the business is, as I told in the previous continuation, dividend received, interest received, and the commission received, discount received. So these are all incomes. And the personal account, because the names related accounts, which may be debit balances, which may be credit balances. If the personal account name related accounts shows debit balances, that is an asset, credit balances, that is a liability. So all this is to be carried forward in a trial balance. I said trial balance means before preparation of the trial, final accounts, whether the previous the bookkeeping process what we have completed, the preparation of the journal, the preparation of the ledger, whether it is correct or not, to test that only we are preparing trial balance. So the trial balance I will tell you now by taking on an example, and before that also I will list it out which item to be shown where as per the double entry system, personal account, nominal account, and then real account. In continuation of the trial balance, we'll discuss now the rules of trial balance. In the rules where the balances of all the ledger accounts. Let you take for example, you may find some assets balances, and you may find liabilities, and you may find so expenses, accounts balances, and then you may find incomes accounts balances, and you may find to some time maybe capital the balance, and you may find the drawings account balance, and you may find the purchases balances, and you may find the sales accounts balances, and you may find the purchase returns accounts balances, you may find the sales returns account balances. So these are all. Apart from that, I already told you, if you any account you have at the end is name is a reserve or provision, and the name end is maybe fund, fund. So these are the generally also the stock you take it, stock, stock. This is the goods produced but not sold. Any firm which produces continuously, sometimes at the end of the year, the goods which produced may not sold because of the lack of demand. That is called as closing stock. The name itself indicates closing stock, stock at the end of the year. Simply it is goods produced but not sold. That is also a stock. Right. These are all. Friends, already I explained the rules. Asset all time to be shown on debit balances, and liabilities it should be shown on credit balances. Expenses as per the nominal account it should be always debited, so it should be shown on debit balances. Incomes as per the nominal account it is to be credited, so it should be shown on credit balances of the trial balance. Capital, which is a liability, see already I mentioned it. Liability is a credit balance, so it should be shown on credit balances. Drawings, right? So you know the capital and drawings which are two related to the owner of the business. Owner. When the owner invests money, that is capital. When owner withdraws from the business for his personal use or maybe the domestic use, that is household expenses, he may withdraw either in the form of cash or sometimes in the form of goods also from his own business. Then it is called as drawings. You know, capital is investment, drawing is withdraw. So it is also debit balances. Capital is credit balances, it is opposite. Now drawings is debit balances. Purchases, all time goods are coming in. When you buy goods, when goods or properties coming or assets coming in, it is to be debit balances. Sales, you know, when you are selling goods are going out from the business. That's what I said. When assets or goods are coming in, it is to be debited. When assets or goods are going out, because it decreases the benefit to the business, it is to be credited. Friends, you will observe one thing. Purchases and purchase returns is quite opposite. Sales and sales returns is quite opposite. Purchase means goods are coming in, so it has to be debited. Purchase returns, you know, sometimes when you buy a goods because of some inferior quality or maybe quantity difference or maybe price difference or maybe any another cause, damage in transportation. So these are the causes, or delay in the delivery. So all these causes, when you buy a goods, maybe you are returning sometimes. So purchase is a debit balances, then purchase returns is a credit balances, because purchases case goods are coming in, it is to be debited. Purchase returns case goods are going out, it is to be credited. Similarly, sales and sales returns are also opposite. Sales means when goods are going out, it is to be debited. When we buy out goods and because of some inferior quality or quantity or price difference or delay in, when we are returning, similarly our supplier also returns, because what we sold goods to our supplier who is in the market, when the goods are inferior quality or the goods are delayed in the transportation because of the pandemic situation, COVID, curfew reasons, there may be technically or any genuine reason also. When goods are delayed to reaching to the supplier, supplier also returns to us. That is the sales returns. In case of sales, goods are going out, so it is to be credited, and sales returns, goods are coming in, so it is to be debited. Friends, this four you observe it. Purchases debit, sales credit. Then purchase returns is opposite. So debit means opposite is credit. Sales returns is credit. Opposite means debit. So this is where a prime activity of the any business you take it. So this is only purchase of goods and sale of goods is a main activity of any business. You take an educational institution, right? So the main activity is rendering services to the student, and the student pays the fees. The fees is only income to the education institution. Like you take a trading concern or you take a manufacturing concern, whomsoever it may be, right? There is only one realization to the business. That realization is maybe sale of goods or maybe rendering services. This form will get revenue, that is called as sales. That is an income, so nominal account to be debited. And coming to the reserves, because reserves and provision is a liability, fund is a liability, all time liability is to be shown on credit side of the trial balance, or credit side or credit balances, because trial balance can be prepared in two methods. The one is in the account form and another one is in the statement form. So account form means that may be debit side or maybe credit side. But the account form, the preparation of the statements is already gone. Now in the recent Companies Act 2013 amendments, all the businesses, their bookkeeping to be maintained in the form of especially the trial balance, and then the final accounts to be in the form of statement of affairs, statement form only. So then it is stock. This is, I said, stock is an asset. So it is to be always debit balances. It is to be always debit balances. So these are the simple rule. Keep in mind, then you can solve the number of the cases in the trial balance without any single mistake. So once again I'll repeat, assets always debit balances, liabilities always credit balances, expenses always debit balances, incomes always debit balances. Capital is also a liability, so it is credit balances. And drawings, I said it is these two are related to the owner, so it is to be debit balances. Purchases, as already I said, when we are buying goods, because goods are coming in, it is debit balances. Sales, when goods are going out, it is credit balances as per real account. And purchases, if it is debit balances, purchase returns, definitely it is opposite, so credit balances. Sales is credit balances, then opposite to sales is sales returns, it is a debit balances. And then if you find the end of the balance, which is in the problem of the trial balance, a name like a reserve, fund, provision, it is a liability in their nature. So all liabilities to be credit balances. And stock, these stocks are, friends, two types: opening stock and the closing stock. I defined a closing stock. Closing stock means it is the stock at the end of the year where firm produced but not sold because of the lack of demand or any other reasons also. Then it is a closing stock. For this financial year, it is closing stock. When you are entering into the next financial year, this year closing stock also to be carried forward to next year, it is named as opening stock. That means, so closing stock of this year will be carried forward to next year. Then you can call it for next year it is opening stock. Both stocks are, you can take into the trial balance only debit balances. So these are all the rules. Now you just observe one case where I have noted down here. So these are the components where given in the problem analysis.